We move on now to our next company on the radar, and we're putting the spotlight now on IRB Infra. IRB is reacting favorably to the fourth quarter performance. Performance has been largely steady. Margins have expanded. The toll collections also look fairly strong for FY25. So let's discuss this and more with Mr. Anil Yadav, Director Investor Relations at IRB Infra. Mr. Yadav, thank you very much for joining in. So the toll collections have been strong, but when I look at the overall growth for the company, whether it's fourth quarter or the full year, it's in low single digits. I mean, fourth quarter about 4%, full year revenue up about 2.7%. So let's start with the toll revenues and what you're penciling in here in terms of traffic growth, any increase in toll charges across the major assets that you operate. Give us a sense on the tolling business, then we'll talk about the others.
Yeah. Thank you. Thanks for the opportunity. In terms of toll collection, as we have highlighted that this financial year overall growth on IRB and private InvIT put together, the growth was 23%. And we command 10% of the market share as far as overall India's toll collection is concerned. Overall, India's growth in terms of toll collection was 12.5%, whereas IRB's growth was around 23%. And we have started a couple of projects in the FY25, that was TOT 12 and 13. There, the numbers were much better than our expectation. In fact, we have surpassed our initial estimate on both the projects. And in terms of we have already declared the April month's number. There also we have seen a healthy traffic growth and also tariff revision from the 1st of April. And we have a couple of projects, that is one Palsit Dhankuni, where it's a 4 to 6 laning, where we are collecting toll at 75%. Once the project is about to complete, then we will start charging 100% of the tariff. And plus there will be 3% escalation also that. So that will further improve the toll collection. And Ganga project is also on verge of completion. We expect project to operational from second half of this financial year.
So would that mean that you continue to grow your toll revenues at what, say, 20%, 25% this year? What's the outlook?
Yeah, I think this financial year, we have not added any asset. Last year, the growth was 23% on backdrop of the Hyderabad ORR project for FY24 was operational for partial half of the year. And 2 projects we have added the last financial year. This year, April, we have delivered a 10% growth. And we expect low double-digit kind of growth in the toll business as only 2 projects will become operational, which will be from the second of this financial year.
Got it.
But if we will get the further asset, then definitely the...
Fair enough. No, that makes it clear. 23% was because you added big assets like the Hyderabad one. This year, you're looking at, as of now, you're looking at low double-digit growth in your toll revenues. Got that. Now, I want to come to the construction business where the revenue had a small dip. I think you're at about 1,200 crores. Now, that's a large part of your business, but it doesn't seem to be picking up enough steam. Maybe it's lumpy in nature. But what can you guide on the construction side?
I think construction business complement our asset business. We have an asset base of 80,000 crores. We do construction for in-house private InvIT, public InvIT, and subsidiaries of IRB. And going forward, also, our focus will be more on the asset business. And if one looks at the EBITDA also, around 65-70% EBITDA comes from the BOT business. And gradually, it will... The construction business, since there was low activity in terms of new award, construction revenue has declined, but which only contributes 15% of the overall business. And going forward, if you look at in last 2 to 3 years, our O&M revenue is consistently increasing, and where we have visibility of around 20 years in terms of the O&M revenue. And we have good margin on the O&M side.
Just a clarification now in terms of revenue recognition. Our research team is just asking for this clarification. You're adding toll collections. With the new accounting changes, the toll collections are treated as revenue, right?
Yes. So in terms of if you look at the accounting for the company, toll collection is treated as a revenue for the company. And this was the consistent accounting which we are following from our listing days, that is in 2008. Construction revenue based on the IFRIC 12 principle initially, and now there is a accounting standard also that also gets accounted as a realized revenue, and construction revenue also forms part of the revenue.
Okay. So let's talk about the tendering pipeline and some visibility on what the construction part of your business is going to look like. The toll part, you've already told us, low double-digit growth. So it'll keep growing steady. But what about the rest of it? And my question is really, I mean, on a top-line basis, like I said, this year, it's been very flat, just 3% top-line growth. What will FY26 look like?
I think in FY26, as we have seen a very slow award in terms of the project, but pipeline looks quite robust. If you look at last 1 decade, the large capex in the road sector was funded by the government. And now the monetization of those projects will happen. So those projects will expected to come on TOT basis. And government is also talking about private participation. We are expecting roughly 60,000 crores worth of project on a TOT basis, and around 45 to 46,000 crores worth of project is on a BOT basis. And as and when those projects will up for the bidding, we will be participating for those projects. But with respect to the existing business, I can assure our investor that our bottom line can, with the consistent increase in the toll revenue of 10-12%, our bottom line can grow also in that range.
Okay. So, then that's low double-digit growth in the bottom line as well. Margins have looked good. Margins have been consistently improving. At the EBITDA line, you're almost at, I think, 46.5%. So does this remain intact? And this opportunity that you mentioned, the TOT opportunity, those are large numbers. I mean, how much are you confident of getting? Any sense of, how your order book is going to look like, total order book?
Yeah. In terms of first in terms of TOT requires upfront capital. And if you look at the company, we have cash also on the books, and our debt equity is net debt to equity is 0.59:1, which is lowest as far as industry is concerned. And plus, the private InvIT has offered 3 assets to the public InvIT, where the EV is around 8,500 crores and equity expected to realize is 4,800 to 5,000 crores. With the 5,000 crores of equity realization, typically the TOT projects are funded 65 to 35 or 70-30 debt equity. If you consider 30% or 35% equity, we can add around 15,000 crores with this kind of asset sale, what we are doing from the private InvIT. So we have sufficient liquidity available to bid for the project. We have our asset base as of now is 80,000 crores, and we have aimed to reach to 140,000 crores asset base in next 3 years.
All right. Thank you very much for that explanation, pretty comprehensive in all respects. Thank you for joining us, and good luck as we look ahead.